Hello and welcome to Trading 5 Talents. In today's video, I want to go over two trades that I made yesterday, which was Friday, October 14th, 2022, using SPY. So my sentiment going into Friday's market was bearish. And the reason was because on Thursday, which was the 13th, the market was very bullish after the CPI report. And then I expected Friday, I was going to see a reversal. At least that was my intention. So if we look at the daily chart for SPY, you can see the green bar is Thursday. The red bar is what I was hoping for, which would have been the reversal on Friday. Not necessarily what I'm hoping for, just what I expected. And Thursday, if you're trading in the markets, you would know that it was a very large and violent reversal. I mean, it was down maybe 2.5% shortly after open or after the CPI report release. And then it just kept rallying and it went up another 2.5%. So there was like a 5% move in one day going red to green. And so with all of that momentum upward on Thursday, I was expecting for maybe a small continuation into Friday, but then eventually a reversal. So I made, based on that assumption, I made two trades on Friday. So I'm looking to enter a short position on Friday, and I was either going to enter a long put or a short call vertical, which is also referred to as a bear call spread or a call credit spread. So those two short positions is what I was going for. But then I also needed to address the question of whether or not I was going to hold over the weekend, because this was a Friday trade and, theta decay and who knows what's going to happen over the weekend. So these are the questions and these are the thoughts that I had going into Friday's trading session. So here's the 5-minute chart of Friday in the SPY. So you can see shortly after open, we did have a small continuation moving upward. And then you had that red candle going down, and then it was just a slow trickle all the way down throughout the rest of the day. So shortly after open, I went long on a put. This is a 360 put. I bought it for $472, so that's $472. So you can see that trade here. This was approximately 10:14 a.m., and then I got filled at $4.72. All right, after that, I entered another short position, and that was a call credit spread, or this short call vertical. And this was entered, if you look here, you can see this call credit spread was entered at 10:43 a.m., and I sold 10 of them. So the idea here is I sold the 370 call and then I purchased the 372 call. So it's a 2-strike width. That means each vertical is going to require $200 of collateral. I sold 10 of them, so that's going to be $2,000 in collateral total. And what I want SPY to do is to stay below 370. So I drew this green box here on the chart because the lower bound of the box is 370. I need SPY to stay below that. The upper bound is 372, which was my long call. So basically, if it stays below the green box, then I'm fine. So selling them for 29 cents each, selling 10 of them, that would be $290 in credit that I received. So I got these two trades on the table, both bearish, and I want SPY to continue downward. So what's the issue here? Well, in my case, I only had one day trade left, and I really didn't want to hold over the weekend. So the plan was to figure out a way to use only one day trade and not have risk over the weekend. So I'm entering a short call vertical and a long put. I don't want to hold over the weekend, only one day trade left. Now, I'm setting this up as if, I guess I didn't know what I was going to do once I entered these trades, but I already had a plan going in. I'm just going over what that plan was. So which one do I close? Now, for some of you, if you only had one day trade left, you may not have entered both of them at the same time because you wouldn't be able to close both of them at the same time, or you just would have held them over the weekend, or you would have done a completely different trade, and that's perfectly fine. This is just showing what I did and what my mentality is on a day like this and how I'm handling these trades. At the time that I was considering closing them, they are both profitable because, as you saw in the previous chart, SPY had gone down. It's approaching my long put. It's well below my short call vertical. So both are profitable. And so here is just a little summary. So the position, the short call vertical, of which there are 10, is in green. Long put, I only bought one of those, and that's in red. The collateral, you can see the difference, $2,000 versus $472. The profit at the time that I was considering the closing process, $150 for the short call verticals and then $100 for the long put vertical. And the ROR, 7.5% for the short call verticals versus 21% for the long put. And then the theta. So theta works in our favor with a short call vertical because we're selling premium. And that obviously is theta is good. Theta decay is good for premium sellers, whereas theta is bad if you're long on options, and that's a long put. So theta would not be good. That's why over the weekend hold is probably not ideal, at least in my case. So which one do I close based on this setup? Well, this is what I did. So I created a ghetto spread, and I mentioned this in a previous video, again, using SPY about a zero loss trade. And I'll go through what this ghetto spread is, and I'm not sure where that name comes from. It's just what I've seen, but this is how it's done. So really, a ghetto spread is a bear put spread, except instead of entering a bear put spread or a long put vertical, it's actually entered for a credit. So you're not paying money to enter this. You're actually receiving a credit eventually because you're legging into the spread. You're buying one position, waiting for it to go into profit, and then you're selling that second part of the spread. So naturally, this is a debit spread, a put debit spread. But here was my setup. I entered the long put, as I showed you. That was the 360 for $4.72. I waited for it to get into profit, and you saw from my previous table that it was about $100 at the time I was considering this. But it actually went a little bit lower than that. And then I'll sell a deeper in the money put for a credit. And that credit was greater than how much it cost me to buy the long put. Okay, so the long put cost me $4.72. So I wanted to sell a deeper in the money put for greater than $4.72. And so that locks in profit if you're in profit making this second trade, or it at least takes the risk off of the table. And it doesn't use a day trade because you're not closing that initial long put. You're only selling an additional put. And now you can see that I'll show you that I can hold it over the weekend without any further risk. Now, if in this case, the underline, so if SPY moves in my direction, which is still bearish, okay, so if it still goes down over the weekend, if it gaps down on Monday, I'm going to have more profit than I have now. However, if SPY moves against me, and let's say it gaps up and continues to move up over the weekend, then I'll still have profit. It just won't be as much profit. So let's take a look at the chart once again. So in red is the long put. You can see that I purchased it around 10:15ish, and by the end of the day, or at least when I entered the ghetto spread, it was at 5:32. So I'm up $60 on this trade already. Okay, $60 on the trade. Now with a call vertical, what I did there is I just closed it out. So I entered for 29-cent credit and I exited at 9 cents. So that's a 20-cent profit per vertical. So each vertical, these are options. So that'd be $20 per vertical. I sold 10 of them. So that means I gained $200 in profit from this single day trade, which is very good. I used $2,000 in collateral. I made $200. So that's obviously a 10% return for just a few hours worth of waiting for SPY to relatively stay the same from the time I entered till the time I exited. It just stayed the same. Theta decay took over the rest. So I already used my last day trade by closing that call vertical, but I'm still left with this open long put position. So what did I do? As I sold the 359 put here where that arrow is, and you can see that right here. You can see the 359 put. I sold it for 502 at about 3:41 p.m. So I sold it for 502. Which is greater than what I paid for the 360 put, 472. In fact, it's 30 cents more than what I paid to enter that 360 put. So putting those numbers in, what does that do for this spread? So let's take a look at option strat, and I'll show you how that works. So remember, long 360 put, $4.72. Short 359 put, $5.02. Okay, here we are in options strat, and what I've done is I've entered this as a bear put spread, but again, naturally that's a debit, but in this case it's going to be a credit, and it's just referred to as a ghetto spread, so that's what I saved it as, just a ghetto spread. All right, so here was my initial one right here, 360 put, $4.72, and then I waited for that to be in profit, and then I sold the 359 put for $5.02. So what does that do? It locks in $30 in profit. Locks in $30 in profit. The max profit is going to be $130. So you can see there's no loss in this trade. And here is what the profit and loss graph looks like at expiration. And no matter how far I go out, there is zero loss in this trade. So I'm either going to make at minimum $30 by the time this expires, or I'm going to make at maximum $130 by the time this expires, which is next Wednesday, by the way, October 19th. So this is how I got around locking in profits on 2 profitable trades, but only using 1 day trade. So again, I was in the short call vertical. I was in the long put. I closed the short call vertical and burned my last day trade. I locked in profit with this long put by entering a ghetto spread. So no matter what happens over the weekend, the risk is off the table. I'm going to be making profit on this particular trade. So if you have any questions about this, or if you would have done something completely different, I'd love to hear about it. Please leave a comment down below. Or you can catch me on Twitter at Trading5Talents. In the meantime, if you'd like to continue to follow along with some of the trades that I'm doing and how I'm using options trading to pay off my Tesla, then go ahead and click on the subscribe button. We'd love to have you join. So until next time, trade wisely and take care.